This is Zane Goldthorpe with ProWriters, and in this class, we're going to discuss invoice manipulation. Invoice manipulation is the release or distribution of a fraudulent invoice or fraudulent payment instruction to a third party as the result of a cyber event. Let's look at an example of how the attacks usually occur. Invoice manipulation losses start with some form of breach of an insured's network. From there, the hackers find their way to accounting and they study common transactions. When they identify a pattern of invoices that go out to the insured's clients, they will then alter the invoice by changing the routing number. The hacker will then draft an email from inside the insured system and send the falsified invoice to the client. From the client's viewpoint, the email has come from their normal trusted partner and the amounts and the dates are all correct. There would be nearly no way that they would catch the altered routing number, and therefore the client releases the funds. A few days later, the client receives another invoice from the insured for the same amount and immediately informs them that they have already paid this invoice. The insured disputes the client and says they have not received it yet and to please send payment again. At this point, it is usually discovered that fraudulent activity was involved. Only when a full investigation occurs is it discovered that the insured suffered a breach and that due to the breach, the hacker sent the fraudulent invoice. The client who sent the money will claim that it's not their problem and that they were not the ones who got hacked. The insured will try to claim that the client should have verified the routing information before sending the funds. And from there, it usually gets ugly. This scenario can lead to a long and difficult battle between each party as to who should pay the loss. But if the insured has a cyber policy with invoice manipulation coverage on it, they are protected up to the limit. Sometimes there are situations where both the insured's policy will pay out if they have invoice manipulation, and the client's policy will pay out if they have social engineering. If neither party has a broad cyber policy, though, it just ends up in a long and nasty fight. For more information on invoice manipulation and how you can protect your clients, reach out to us at ProWriters anytime.